please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. So the market's up about 70 odd points. So 10,559 is where we're at. Ashwani Gujral is with us. Ashwani, thanks very much. Good morning. Sorry about hitting you late today. But your reading of things and whether this could extend more?
It's looking a bit better than it was in the morning, because in the morning PSU banks were going in one direction and private banks were going up. Now I think the PSU bank index, after being down minus 0.7, is now come back into the green. Also the IT space, which went down as low as CNX IT minus 90, that is beginning to recover. So there's lots of rearguard action, plus there's a general theme where money is strongly moving into private sector banks because the governance premium is probably coming back. So that seems to be a trend which could accelerate as we go into the close. So overall, still markets look higher, and they haven't really given up gains from Friday. Having said that, individual stocks, IndusInd Bank is a buy with a stop of 1670, target of 1740. HDFC Bank is a buy with a stop of 1890, target of 1950. And Axis Bank is a buy with a stop of 540, target of 565.
Okay, all right, Ashwani, we're going to let you go on that note. Completely run out of time today, but thanks very much for joining in and taking us through all of your strategies. Just want to pull up TCI Finance before we slip into a break, because it is on that high risk of NBFCs, which has been that list which has been released by the Finance Ministry. And you can see that now that stock is reacting to this piece of news. In fact, it's reversed and is down around 3% at this point in time. We've reached out to all of the managements in order to get more clarification. So we'll keep putting that out as and when it comes through. But that's on TCI Finance as of now.
So 72, 73 points on the Nifty. Devang Mehta is head of equity advisory at Centrum Wealth Management. He's with us on the show. Devang, good morning. Good to have you here. So just to take stock of where we are in this upswing within this broad downtrend that we saw. You think the correction is behind us?
Good morning, Prashant. Thanks for having me on the show. I think, yes, probably it can be said in sort of hindsight. It's very difficult to call an exact bottom, but what we have seen in a long while, and I can say since demonetization, we always had a correction of say 3 or 4% or maximum 5%, which was normally bought into. This is a first sort of a meaningful correction in terms of valuations, price points, and in fact also some time where we have seen around 7-8% correction, but the price action on a lot of broader market stocks and themes have been very big. So I think probably yes, it's a good time. I can't say it's an exact bottom or it's a bounce back or a relief rally. That will be only told in hindsight. But what we are advising is that in any such sort of fall, you have to sort of have your shopping list ready or identify the themes and go ahead with nibbling into stocks which you always wanted to buy.
How are you approaching what's happening within the pharmaceutical space now, Devang?
Ekta, clearly there are sort of headwinds which we have been seeing in this sector since a long while, and I think while markets were just at a lifetime high in the last 2 weeks, we have seen pharma stocks, normally all the frontline pharma stocks, being at 3-year, 4-year, 5-year lows. It's been a difficult ride, but from here on, I think the negativity seems to be out of the way at least, and there can be still some time correction which could be there in for pharma stocks before any meaningful or a substantial rally begins. So we'll be very selective over here. As a pharma pack, you shouldn't go out and hunt for everything and anything, but if there is something selectively available in the domestic arena, you should surely go ahead and sort of invest with a 2-3 year horizon.
Why don't you run us through what you are pushing or what you are asking your clients to look at buying, Devang? A few names.
Yeah, so in fact, can't take names right now, but whatever we have seen through, in the sense as a thematic play in the next couple of years would be very obvious. So there are themes like housing for all, of course, proxy plays for real estate, like housing finance companies, cement companies, adhesives, paints. These are some of the themes which also benefit from a migration to a sort of a non-formalized economy to formalized economy. This will be surely beneficiaries. Insurance companies, I think clearly life insurance and general insurance as a segment would sort of need a lot of penetration in India, and also the density of insurance in India is clearly, I can say, less. So a couple of themes in this financialization space, and as I mentioned about housing for all, and of course the government focus on agri/rural, and in fact infrastructure in the semi-urban and rural areas. All this are plays which probably could find favor amongst the investors in the next 2-3 years. So we will play more on the domestic theme rather than on the exports, which still requires a lot of course correction.
Okay. SBI mentioned that MTM losses might, in fact hit earnings for a lot of PSU banks in this quarter. Plus, we obviously have the RBI recognition to go through as well in terms of the latest circular. How would you be approaching PSU banks?
Generally, we have been negative on the PSU banks as a space, and private banks continuously on the more garnering of market share from the PSU peers have been our preferred picks, and that too on the large size of private banks. But surely I think PSU banks again over here might seem to bottom out, but the sentiment towards those in terms of even fund flows and in terms of even shifting from PSU to private seems a dominant force at this time. So I wouldn't sort of advise to get into the PSU banks. Let's see some of the recovery. We might be a little late or ahead, or might be a little behind the curve for that. But I would mind sacrificing those sort of returns for a bit of certainty, which is advisable in terms of private sector banks.
All right, Devang, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's the fundamental view coming in from Centrum. But this entire weekend was a buzz with the pharma industry bigwigs who had gathered at the 15th edition of BioAsia in Hyderabad, and I had the opportunity to catch up with Satish Reddy of Dr. Reddy's to talk about the pricing pressure in the US and the way ahead. So let's listen in to what he had to say.
So I think it's a part of things settling down somewhat, at this point of time, because if you see the kind of pressures that have led to this situation, it's been a variety of things. I mean, some of these things have happened the first time, because in the past you would actually see industry consolidating. For the first time over the last 2-3 years, you've seen the customers consolidate, and that's had its own effects. Because almost, if you see, about 90% is of the purchasing is done by 3 large purchasing groups. So you can kind of imagine the pricing pressure that puts on manufacturers, and that's what played out. That's number one. The second part is obviously the number of approvals. I believe last year was almost about 1,027 generic approvals which were given by the FDA. So it also has its effect on number of people competing in the market, and also pulling the price down, because that's the way to enter the market once they're coming late. So if you see the net effect of all this, it's led to severe pricing pressures for most of the companies, and it's in most of the cases it's been almost double digits, including the large companies. That's what we have seen. So is that completely settled? I don't think so. So it's still going on even as we speak. But obviously it will bottom out at some point of time. We'll be quite sure of that.
Okay, so that is the view from Satish Reddy, but I also caught up with Dr. Ishwar Reddy, who's the newly appointed head of the DCGI, and asked him about the priorities from the DCGI over the next 1 year and compliance issues of Indian drug manufacturers.
So the major priority is how we can do ease of doing business in our system. That is one of the most priority, thereby how we can promote Make in India, and also how we can promote drug discovery in India. In that process, we are going for how best we can use IT-enabled services in India. So in that connection, we are going to take a support from the CDAC organization, which is under the Ministry of IT. We are going to come up with the IT platforms, where complete regulatory mechanism, the transparency mechanism, and also we are in the process of come up with the new regulations on the clinical trials,
when we're talking about drug authority as well, we're talking about the compliance of Indian drug manufacturers on Indian sites. Can we expect maybe some more strengthening of that procedure of compliance under your governance?
Sure. I think to ensure the compliance to GMP standard and other requirements, we are already started risk-based inspections. The companies which are manufacturing the pharmaceuticals at reasonable any risk. So we have identified some companies, till now 184 companies we have already inspected. And wherever company have violated any norms under the Drugs and Cosmetic Act and rules, we have, in some cases we already taken some actions. With some other companies we are in the process of taking the actions.
Okay, and on that note, we're going to wrap up Trading Hours.